So our
Great.
first lesson is an introduction to investing. And before we start, we'd like to introduce you to Target Alpha Alberta, as this is our first event. So Target Alpha is a student-led organization with a mission of promoting financial literacy among Albertan youth. This is done by hosting conferences and competitions, as well as providing resources to students like this presentation.
So this is our calendar. We will be having our introduction to investing today. And then this is generally what it will be looking like for the following weeks, including our index funds, mutual funds, exchange traded funds, and basic terminology and understanding your account coming soon. In this 45-minute presentation or lesson, we will be covering the topics of investment, the stock market and stocks, as well as why we should care about each of them. Each segment of information will also be accompanied by some interactive activity or a discussion. And finally, we will collect feedback at the end. We will now be having a 10-minute open discussion about, disclaimer first. So yes. This is our disclaimer.
Yeah, so it's just a disclaimer. So again, the purpose of this presentation is just for educational purposes. None of the content of these presentations or this webinar series are meant to be taken as investment advice. And with all investments, there are certain risks associated with them. So please educate yourself on what risks certain types of investments have.
Great. Let's proceed. So this is the outline of today's lesson, as we mentioned earlier. So let's go into investing. So now we'll be having a 10-minute open discussion about what investing means to you. Feel free to open your mic or type into chat what investing means to you.
Anyone? So we have from Michelle, I hope I'm pronouncing your name right. Putting money somewhere it can hopefully grow. Yeah, that's definitely something that investment can help you with.
Yeah, we have Jolie here saying putting something, expecting some value in return. So definitely like a common theme of getting something in return for some kind of risk.
Yeah. From Nurhan, investing means to be able to put money somewhere in a way that gets back to me in the future with a bigger amount. So yeah, that's definitely something about investment, having essentially just the math side of it. If you're seeing what percentage return you're getting every year, so doing the exponential math on that, you should hopefully walk away with a bigger amount in the future if you make the right moves. Here, Yusuf, what if we actually let our audience type into our Mentimeter so we can share their responses?
Yeah, sounds good. So if you can go to www.menti.com and use the code below, which I'll actually type into the chat so you don't have to.
Yeah, and then in the meantime, from Michelle, we've actually had another response from him or her, considering what something can be worth in the future and if that is worth the risk. Yeah, that's definitely something that you want to see because you want to compare the different options you have with your investments and the risk level they have and the rate of expected return.
Exactly. So let's see. Once people have responded to the Mentimeter, we will look at the whatever's generated.
Okay, here we go. I'll share the screen with them, Yusuf.
Sure.
So here we go. Can you guys see the screen? You see?
Yes.
Okay, so we have a world plot over here. So we see, what does investing mean to you? So we have to make money. Definitely, that's something that we all want to do, especially with our own money. A strategy, that is a big part of investing. Risk, yeah, that's with all different types of investments. Everything carries certain amounts of risk with them. Then we have securities, which is something that we'll actually go over today. Property, that can be a type of security, or it can be something like owning a house as well. Trying to read sideways here. We have the market, that is something as well. With investing, that's something you want to look at, but not necessarily just a single market or whatever. Yusuf, if you care to go over some of them?
Yeah, sure. I've seen risk is like a big one, and that's good because everything does come with lots of risk. Profit and growth, definitely return, those go all hand in hand. Understanding, you should really understand what you're investing in before you do it. To take risk, expecting PR, I think that meant profit. Making money growing. So it's very common that we're looking at something where we're taking risks, expecting some type of return.
Okay, so it looks like we are not having any more answers, so we'll return back to the presentation.
Okay, it's not working properly.
Here, I can present it if you need some.
I'll try again.
Okay.
Is it?
Yeah, I see it now.
You see it in the presentation?
Yes. Can somebody in the audience confirm in case it's just me?
Yes, it's good.
Okay.
Okay, great. So what does it mean to invest? Well, investing is the act of allocating some type of resource, such as money, with the expectation of generating an income or profit. And generally, you can invest in endeavors such as a business, by starting a business, in assets, such as investing in the act of allocating resources. Usually money comes with the expectation of generating profit. And I just read something twice. Basically, you can invest in different assets such as stocks, real estate, and many other asset classes. And these are generally done with some assumption of risk to generate a profit. And obviously, what you want to do when investing is also to make sure that you're investing smartly and investing well. Generally, you invest trying to resell by purchasing at a lower price and selling at a higher price. So what are stocks? Well, stocks, most investing these days are done in stocks. In fact, 55% of Americans own about 60% of all stock. A buyer of a company's stock becomes a fractional owner of that company, which means you actually own a very small amount of whatever company you invest in. Owners of a company's stock are known as its shareholders and can participate in growth and success through both appreciation in the stock as regular dividends pay out the company's profile. Often shareholders can have some influence on the stock. For example, large shareholders may be able to vote for new board members.
So what is a stock market? So you've heard about stocks and you've heard about stock markets. So the stock market is actually where stocks are physically traded. So this happens on different exchanges. So we've heard of the NYSE, the New York Stock Exchange, the NASDAQ, which tends to be a more technology-focused stock exchange, the LSE, which is in London, the SSE in Shanghai, and there's so many more. Calgary even has this stock exchange, believe it or not. So it's just wherever stocks are traded, and it's usually wherever companies are based out of. So if you happen to be a Canadian company, you're most likely to be traded out of Toronto, an American company out of New York, and so on and so forth. So now we'll
Now let's move to our Kahoot activity. So this is the code you can enter to join the Kahoot. I also typed it into the chat, so it's easier to get.
Looking at Nurhan's message. Yes, so these recordings, I believe we're planning on sending them to YouTube, so these can be reviewed back at a later date. And then as well, these slides will be sent out to participants in a way that you can just view the slide. Okay, so it looks like we're not getting any more people joining the Kahoot, so maybe we'll give you guys another minute or so to join if you want to participate, and then we'll start it.
Yeah, just a reminder, if anybody doesn't know, you just go to www.kahoot.it and enter the pin, and you should be able to join. Okay, it looks like a few people have joined, so we'll be starting. You can always start in the middle of the Kahoot, although it is not too long. Actually, let's put the music on. Yeah, so in this case, we got the NYSE, which is the New York Stock Exchange, the SSE, the Shanghai Stock Exchange, the LSE is the London Stock Exchange, and lastly, the Toronto Stock Exchange, where most Canadian companies are traded, and also is stock market based in Canada. Yeah, so this is a pretty interesting statistic, and it shows that most of stock is held by most people, which shows or like a lot of people in America, which shows their significance in prices of stocks. That's great stuff. So we'll be proceeding with the rest of the presentation. By the way, who is Inspired Falcon? Congrats, Victor. We may be able to get you a t-shirt from our sponsor, Index. So just message me after the call. Back to the presentation. Great. So yeah. Oh, sorry guys. I think there's someone mowing their lawn. I will just mute myself.
Okay, so now we'll be going over why you should care about stocks as the fourth part of our presentation. So, okay, so we'll just wait for the presentation to come back. Next slide, Yusuf.
Sorry?
Next slide.
Oh, great.
So how do you all see stocks affecting your life? Just feel free to either unmute yourself or in the comments below in the chat box.
Just to weigh in then, I feel that stocks are something that you could really invest in for the future. And so investing in one stock now at our age, in like high school, could mean bigger things when we're older. And so I think stocks have the potential to really change your life. It's just a matter of whether you take advantage of that kind of opportunity.
Yeah, that's definitely a good thing to consider, Harvey. And then also from Michelle, we have a stress factor. That's definitely something that to consider because a lot of people use stocks to help save up for their retirement. Like if I don't know if any of you guys were paying attention to the news back in early 2020, or you already had all tuned off because it was all dominated by COVID, but a lot of people couldn't retire over there because they lost a lot of value in their portfolios. Then we see from Victor, he says, I own some stocks, so perhaps some long-term compound interest for the future. Yeah, that's definitely something as us, so we can help grow our portfolios. We have Nuran saying, never tried it yet, but really want to. That is something true. You can start trading before you're 18, but typically you can open an account here in Canada, like a TFSA or an RRSP at 18, or in some provinces, 19, depending where you are. And then also we have Jolie saying supporting companies that align with your values. That's definitely something that you can help invest in. with more of an ethical investment and believing in companies that support your own values. So that's something that we've even seen with religions, where there's something called halal and kosher investing for Muslims and Jews to invest in companies that don't go against their own religious laws. And then also we have investing for your retirement or education saving plan. So yeah, that's something that in stocks can be used for. And then we have Harvey saying, I think it would be cool to be one of those super rich people who invest in stocks and everything rather than having to work a 9-to-5 job. And on a similar note, Jamie is saying financial freedom. So stocks can really help you attain that. A lot of people don't use solely stocks for attaining financial freedom, but rather as a step on a journey to help attain financial freedom and having a career in life that's more fulfilling to them. So earning money while you sleep, also from Jolie. So it depends what stocks you have. So if you're in New York and you only have American stocks, it's very unlikely you'll be earning any money while you sleep. But if you have stocks from all over the world, say in China, Australia, or even in London, then definitely you'll be earning some money in your sleep, hopefully not losing it. Then we have Evan saying, there's something I plan on investing / trading in when I turn 19, so I can grow my wealth by obtaining a passive income stream. And like Victor said, to take advantage of compound interest over time. So yeah, that's something that stocks can help you, because some stocks, as we'll talk about later in our webinar series and a different day in a couple of weeks, that you can earn money from stocks in dividends. However, these are typically very, very small. It's a very, very small amount per share you own. Like if I'm remembering correctly, Coca-Cola pays about 5 cents per share that you own. So it's not exactly enough to be a passive income stream if you only own a couple of them. But what Evan said is something that can really help people later down. Yusuf, care to weigh in?
Yeah, I'm seeing To the Moon, which definitely recently with all this pump and dump and stuff with cryptocurrencies, and definitely that's coming. Cryptocurrencies definitely let you earn money while you sleep. I would say maybe you don't really earn money while you sleep, just buying and selling cryptos, but maybe staking, which is a new type of crypto, and we will be covering cryptos in another series later on. We have to keep an eye out for stocks? Nurhan, would you be able to maybe emphasize or like reiterate what's that mean? Maybe I think what that means is we should be watching our stocks to make sure, I don't know, we're not doing anything, or like we watch them so we sell them before they go down. I don't know, something like that. Yeah, definitely lots of research before you invest in any stocks is good to minimize risk. Yeah, checking the market as well. That's definitely important. I think that's good for this slide. Let's move on then.
So we have stock usage in the real world. So stocks are often to use, I used to say, for retirement or other goals, like you guys were saying when you're telling us how do you see stocks affecting your life. So in Canada, you can open TFSAs, RRSPs, and RESPs, which allow people to save or invest for retirement and education. And as well, in the real world, depending on where you're working, in certain companies, you can be gifted employee stock over time. So typically, this really only happens if you work for a publicly traded company, such as Google, Shell, Air Canada, Apple. However, if you're working for a startup, it could be that you're also paid in some shares of your startup. So if it ever ends up one day that it does become a publicly traded company, you can end up making a lot of money just because you work there and you have a share in that company that went public.
So now let's just recap over what we learned today. We started with talking about what we think of investing, and there was the common theme that definitely investing does involve some risk, but also can involve return. And we found about all the what we could invest in, such as real estate, stocks, and other asset classes and types. We then got to learn about stocks and their importance in investing, and the stock market, which allows for liquidity and to buy and sell stocks. And definitely we found out that stocks are super helpful and useful in the real world in many different ways, as Cheyenne has shown. In the following weeks, we'll be continuing in this. Next week, we'll be talking about exchange traded funds, mutual funds. So definitely come. We'll be continuing this web seminar for the next 6 weeks, Sundays at 5. If you have any questions, please contact us at targetalpha.com. Furthermore, for more information on upcoming events, please use the social media links below. So here's our website at targetalpha.ca, as well as our Instagram and Facebook and LinkedIn.
So Yusuf, if you just go back to the question slide. So if anybody has any questions, feel free to unmute yourself or just type it in the chat below. And we'll try our best to answer them to the best of our ability. So we have a question from Jolie. So what are TFSAs? So in Canada, TFSAs are tax-free saving accounts. So every year you can put in money into your account and not pay tax on that. And I believe every year you can put up to a maximum of about $5,000 a year. And that also carries on, that capacity carries on. So every year. So if you're not in, you don't necessarily have to put $5,000 in your first year, but that capacity carries on as you keep on living and working, in Canada. Then we have from Harvey, will we be covering how to physically invest in stocks? So we'll be covering the elements, like what we have lessons on looking how to analyze stocks. However, physically invest in stocks, we would recommend that you guys go to your local branch of your local bank. So TD, RBC, HSBC, CIBC, anywhere. And
additionally, we'll be talking about different types of stocks and asset classes that you can invest in. And you can always use like different apps to invest. Yeah,
like Wealthsimple and Simply Financial. Maybe I know Wealthsimple for sure. So then again from Jolie, we have what is the difference between investing and trading? So typically what we see, trading tends, if you're saying that you're trading stocks, trading tends to be a bit more of a profession rather than saying that you invest. Investment is typically more for the long term, where you're looking to grow your money not over the course of maybe months or even days, but rather years and years. So you're looking at stocks that have a good value to you and you believe will do well in the long run, because you want them to do well so you can maybe retire earlier or have more money in the future.
Norhan is asking about gifted employee stocks. So as we mentioned earlier, that basically means that part of your salary comes in the form of stock. For example, I know at Google, part of your salary, about 15% or something, comes in the form of stock as the value of the stock. So for example, you're making, I guess, 115K a year. And let's assume that the Google stock's $1,000. You'll get 15 Google stocks on top of that 100K in like normal money. That stock can grow or it can depreciate. So it's like more of a risky type of payment rather than simply cash. However, you can make more money over time with that.
So we have from Jolie, do you recommend stock investing for everyone? So the stock market personally sounds stressful for me. So again, we're not making it, this is again with your own will, but looking at historical trends, we see that the stock market on average has been able to grow your money at a much, much more faster rate than traditional savings account, especially after the financial crisis in 2009. We've been seeing very, very low interest rates. So that means if you're sticking your money into a traditional savings account, you're not making anywhere near 2% on that money. So I think my savings account that I have is about maybe 0.5% over a year. So having the stock market can help you grow your money faster and as well take away some of the devaluation of your money from inflation. For example, like in the US, money has inflated by 10%, the value of money is inflated by 5% over the last year. So you can buy 5% less goods since last June. So investing in the market can help you cover inflation and make sure that the value of your money, even though the numerical amount may be different, that it can still buy the same amount of stuff over time. Anything to add, Yusuf?
No, I think that's kind of it for that question. I think definitely beating inflation is an achievement in the stock market. And yeah.
And then even if you're like really stressed and you don't want to really own a bunch of different stocks, what we'll be talking about next week are index funds, ETFs, and mutual funds. So that's something that might actually interest you a lot, Jolie.
That's a great point, Shan. Yeah, those allow you to invest in different things, but basically having less control over them, and it gives you a peace of mind that there are others that are managing that for you. And I think that concludes this lesson, unless anybody has any more questions.
Okay, so we thank you all for coming to today's presentation, and we hope that all of you come join us next week at the same time, I believe. So where we'll be talking about ETFs, mutual funds, and index funds. And oh God, what was I saying? Thank you for coming. And if you feel free to share this with your friends if you also believe this would interest them.
Yeah, we're looking forward to seeing you all in the coming weeks.